Agree Realty Stock, ticker symbol ADC. This stock is down only 3% year to date, which is very interesting since the overall market is down 17.5%, which is a big difference of course. Another reason why people love ADC stock is because of the dividends. The payout in monthly dividend and dividend yield is sitting at 4%, which is pretty high of course. But does this also mean that ADC stock is a buy at current prices? Well, in this video I'm going to show you real quickly what Agree Realty does. The most recent earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock. So please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust primarily focused on the ownership, acquisition, development and management of retail properties leased to tenants. Agree Realty has a portfolio of more than 1,700 properties with a net debt to EBITDA of 4x to 3.1x. Investment grade is at 67%. Grocery stores is the biggest sector with 9.4%. Home improvement and auto services are both the second and third largest sector. Walmart is the biggest tenant with 6.9%. To me, this looks all good. We see a lot of big names here and it's well diversified, so this comforts me a lot of course. In this graph we see the investment activity for ADC. Since 2020 they are ramping up. In 2022 they expect to do 1.6 to 1.7 billion in acquisitions. It's growing in decent amounts, so this comforts me a lot as well. When we check the most recent earnings, we see that they invested 372 million in 121 retail properties. Net income per share decreased 11% to $0.46. Core FFO increased 5.6% to $0.97. And to me, this is a very important number. And it's the same story with the AFFO. It increased 7.8% to $0.96. This easily covers the dividend of 0.24 cents per month. To have a quarterly dividend, we need to multiply this number by 3, meaning $0.72 in dividends per quarter. With FFO and AFO sitting at 0.96 respectively, you have a payout ratio of 75%, which is pretty common for a REIT. And it comforts me a lot since dividends are covered very well. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue with diving into the fundamentals. ADC has a market cap of 5.46 billion and a PE ratio of 38. But to be honest, PE ratio isn't a good way to value a REIT. Instead, we are using a price to FFO ratio to see its valuation. Price to FFO is at 15.9. Which is a bit on the high side. I prefer 15 or lower with REITs. But that doesn't immediately mean that this stock is overvalued. Later in this video I will show you my 3 price targets for ADC, so make sure to watch until the end. Revenue is at 404 million, and in this graph we see that revenue went up really nice and steady, so this comforts me a lot. Net income is at 142 million, which gives us a profit margin of 35%. The thing that I don't like here is the fact that it's lower than the 5-year average, so definitely keep an eye on this number. EPS is pretty steady for a REIT. Usually you will see a lot of ups and downs with REITs, but this looks pretty steady to me. Price to free cash flow is at 15.7, which is pretty good to be honest. You want this number below 20, and with REITs you might want to pick a lower number here, so 15.7 looks really good. Analysts are expecting EPS to increase at low single digits. And to me, I don't mind that much since it's a REIT. Revenue is expected to grow quite a lot in the coming years. After 3 years of big increases, they expect revenue to slow down. To me, this looks pretty good. Return on assets is sitting at 3.1%, which looks pretty low. But keep in mind that it's a REIT, so they tend to have lower numbers here. It's the same story with return on equity. It's at 3.7% and I'm okay with that. Return on invested capital is at 5.7% and this isn't the highest of course. But the good part is that it's increasing versus the 5-year average of 3.2%, so that's something that I really like. Current ratio is at 5, which is too high in my opinion. You want this number below 2. The good part is that it's decreasing, so definitely keep an eye on this number as well. Another thing to keep your eye on is the total debt and total cash. I prefer companies who can pay down at least a third of their total debt with the total cash. Right now, total cash is at 250 million, while total debt is at 1.89 billion. So this doesn't look really good. But keep in mind that it's a REIT. They have higher debts in general, so I'm not worried that much. And a great thing about this company is that free cash flow is growing. And this is something that I really like, of course, since free cash flow is used to pay down debt, buy back shares, do acquisitions, and a lot of things. And if we check the shares outstanding, we see that it's going up quite a lot, which is also pretty common for a REIT since they issue new shares to raise capital and grow the business. Next up are the dividends. Dividend yield is sitting at 4% and ADC pays you a $2.79 annually. The interesting part here is that they pay a monthly dividend of 24 cents. So every month you receive 24 cents per share, which is pretty nice. Payout ratio is at 75% as we saw earlier in this video. The 150% displayed here isn't correct. And 75% is pretty common for a REIT, so this looks pretty good. The 5-year growth rate is at 6.9%, which is also very nice. On top of that, ADC grew the dividends for 9 years in a row. Overall, a great looking scorecard. But how about the historical returns versus the S&P 500 and some competitors? I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Next to that, I decided to include Realty Income, which also pays a monthly dividend, MNNN. On the 5-year chart we see that ADC returned 70% including dividends and has beaten all stocks in this list and even outperformed the S&P 500. Both Realty Income and MNNN have a significant lower return. On the 1-year chart it becomes very interesting. ADC returned 3.5% versus the S&P 500 returning minus 13%. Realty Income also had a negative return and MNN has a 4.7% return. On the 6-month chart it's pretty much the same story. Both the S&P 500 and Realty Income had a negative return while ADC and MNN both beaten the S&P 500. On the 1-month chart all stocks returned quite similar, except for MNN. It returned 8%, which is pretty cool. Overall I think ADC did very well and was the only stock in this list beating the S&P 500 on the 5-year chart, which is pretty impressive. But does this mean that ADC stock is still a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10, 12 and 14%, since there's plenty of room to grow for this business, and analysts are expecting more than 20% growth in the coming years. After that, revenue will slow down a bit, so that's why I'm going with these numbers. For the profit margin, I'm filling in 30, 34 and 38%. For the free cash flow margin, I'm filling in 60, 62 and 64%. PE ratio is not the correct metric to use for a REIT, but we have to fill it in, so I'm putting in 15, 16 and 17. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, ADC stock is at $68. I hit analyze and we do see green numbers. I don't pay attention to the PE ratio since this isn't a great way to value a REIT, so I'm only focusing on the discounted cash flow value. We have a low price target of roughly $63 a share, which is right below the current stock price. We have a mid-price target of $78 and a high price target of $96. So, if you believe these mid to high numbers, then ADC stock is a buy. To me, the mid-price target is the most justified here, so that would mean $78. My final conclusion with this stock is that I really like the business, of course. Most fundamentals look pretty good as well. There's a lot of growth potential in revenue, but there are some things to keep your eye on, such as profit margin, price to FFO and debt to name a few. I just found out about the stock and I was immediately interested since I wanted to increase my positions in REITs. I don't own this stock right now, but I have added to my watchlist since I really like it. I think I will do some more research and probably will buy this stock in the coming weeks. Dividends are really great, and to me, there's a lot of growth potential for this company. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.